Have you ever wondered why I always say fair value gap on stream? Don't worry, cause in today's video, I'll tell you all you need to know about a fair value gap. A fair value gap consists of 3 candles. These 2 candles can either be red or green. So what we are looking at now is actually a bullish fair value gap, wherein in an uptrend, you have a very big expanding candle. So we have these 3 candles. You want to take out your box and draw a box between these 3 candles. So this is your fair value gap. These boxes placed here are point of interest for me to use when I want to long from a bullish fair value gap. So when price has went up, I want to see it retrace before I want to buy at a better price instead of buying so high. So I will wait for price to retrace into this box and I'll buy within this box and wait for price to trade at a higher price. In this bullish fair value gap, there's too many buyers participating and there's not enough sellers participating in this trade. So a fair value gap is created to offset the imbalance in the market. That means I'll expect price to retrace back into this fair value gap and then continue to move up higher. A bearish fair value gap is actually the same thing as a bullish fair value gap. You just take a box, then you draw it between 3 candles again. Then this is your fair value gap. So basically now in a bearish fair value gap, there's too many sellers participating and there's not enough buyers participating. So what I expect price to do, right, is that I expect price to go back up into this fair value gap, retrace back up into this fair value gap and continue lower because there's imbalance again, just like I explained earlier. If you want an in-depth explanation of what a fair value gap is, you can always come by our YouTube live stream and just drop us a question, or you can join our community of Only Pips FX members and you can always ask our premium admin about what a fair value gap is.